Hello, and welcome back to Explain the Charts, your go-to channel for an in-depth look at market movements. Today, September 11th, 2025, we're focusing on PUSD, or cable, and the powerful forces currently shaping its trajectory. The currency pair is currently navigating a complex landscape, primarily driven by diverging monetary policy expectations between the US Federal Reserve and the Bank of England. Reports indicate that the market is heavily pricing in a 25 basis point rate cut from the Fed next week, a sentiment reinforced by recent weaker-than-expected producer price index data. However, US August CPI data came in slightly above analysts' estimates, with inflation expected to rise annually to 2.9%, which could introduce some counterpressure on the US dollar. Meanwhile, the Bank of England is anticipated to maintain a more cautious stance, with expectations of their rate holding at 4% on September 18th. This policy divergence, favoring Fed easing against BoE caution, is providing a modest tailwind for PUSD in the short term, holding the pair above the critical 1.35 level. Let's now turn to the daily chart to see how these fundamental drivers are translating into price action over a broader time frame. Looking at the daily chart from April 2024 to the present, we can observe a general upward trend, albeit with significant volatility. The pair made a notable run from the 1.25 area in April 2024 to establish highs above 1.37 by late June 2025. This strong bullish phase, seen clearly in the sequence of higher highs and higher lows, indicates sustained buying interest over this period. However, since July 2025, PUSD appears to have entered a period of consolidation, oscillating around the 1.35 mark. The FX Street 2025 forecast suggests a potential strengthening of the US dollar against the pound due to monetary policy divergence and anticipated protectionist measures under a returning Trump administration. Technically, the forecast highlights downside risks for 2025 if the pair breaks below the 18-month rising wedge support at 1.2682. Key support levels for the year ahead are projected at 1.2037, 1.1802, and even as low as 1.1500 or 1.1000, signaling a potentially significant long-term bearish outlook. Conversely, a sustained bullish momentum would require a move above 1.3490 to challenge resistance at 1.2900 and beyond. Zooming into the daily candles from January to September 2025, we can identify some critical price levels and reversals. Notice the sharp decline on January 2nd, 2025, with the close moving from 1.25194 down to 1.23795, a significant drop that broke key short-term support. This bearish move was quickly followed by a strong recovery, such as the impressive bullish candle on February 3rd, 2025, which saw price surge from 1.2289 to 1.2433. These rapid shifts highlight the market's sensitivity to incoming data and sentiment, especially around Federal Reserve rate cut expectations, which can cause quick dollar reversals. The recent price action, particularly in late August and early September 2025, shows the pair trading mostly sideways, with the 1.35 level acting as a psychological battleground. On September 2nd, 2025, we saw a notable bearish candle dropping from 1.35461 to 1.33807, indicating strong selling pressure, which could be linked to renewed dollar strength or UK economic concerns. However, the pair recovered fairly quickly, showcasing resilience around current levels. The market's indecision near 1.35, despite the modest tailwind for pound sterling to US dollar from Fed easing bets, suggests that both bullish and bearish forces are currently in a delicate balance. Now, let's switch to the 1-hour chart to gain a more granular perspective on recent price movements, specifically from late August 2025. Here, we can see the short-term bearish bias indicated by the relative strength index declining below 50, as noted by FX Street, alongside candles closing below the 20-period simple moving average. The price has been oscillating, showing periods of narrow consolidation and sudden moves. For example, The rapid upward move on August 22nd between 1300 hours and 1400 hours Universal Time Coordinated from 1.34232 to 1.35245 represents a strong short-term bullish impulse, likely triggered by a specific news release. Following this burst, the price entered a period of relatively quiet trading, consolidating around the 1.3520 to 1.3530 region for several hours, with lower trading volumes. This type of tight range after a sharp move often precedes another directional move as traders digest the information and build positions. The resistance level around 1.3540, mentioned in the news, aligns with some of the higher wicks we see on this chart, indicating where sellers have stepped in. Conversely, support appears to be forming around 1.3480 to 1.3460, preventing further downside in the short term. Transitioning to the 15-minute chart for September 10, 2025, we get an even closer look at intraday dynamics and market microstructure. On this chart, we can observe the PUSD pair trading within a tighter range for most of the day, reflecting the cautious, range-bound trading strategies noted in the news. The price fluctuated between approximately 1.352 and 1.356, with brief excursions beyond these levels. Early in the day, the market showed minor upward attempts, as seen from 105 Universal Time Coordinated to 150 Universal Time Coordinated, moving from 1.35205 to 1.35253. Later, during the European and early US sessions, from around 12:20 Universal Time Coordinated to 13:50 Universal Time Coordinated, we observe higher volatility, with a push from 1.35284 to 1.35641, then a sharp pullback to 1.35560. This indicates responsiveness to fresh data or trading flows during active market hours. Volume spikes during these volatile periods confirm increased participation. The constant battle between buyers and sellers is evident, creating short-term support around 1.3520 and resistance near 1.3560. This tight range reinforces the current consolidation ahead sentiment for the short term. For day traders, these intraday levels are crucial for scalping or anticipating breakouts once a stronger catalyst emerges. Reverting to the daily chart, let's summarize our analysis and look at potential future scenarios for PUSD. The overall picture is one of short-term resilience around 1.35, but with significant long-term headwinds. The immediate bullish case rests on continued expectations of Fed rate cuts, which would weaken the US dollar and provide upward pressure on cable. A soft core CPI print or weaker job data in the US could reinforce this, potentially pushing PUSD towards 1.3620 to 1.3750, as suggested by some forecasts. However, the long-term bearish forecast for 2025, driven by potential Fed hawkishness under a new administration and BoE dovishness, cannot be ignored. If the pair breaks decisively below 1.3470, it could expose deeper support levels at 1.3446 and the critical long-term supports identified for 2025 at 1.2037, 1.1802, and even 1.1500. Conversely, a sustained move above the 1.3490 resistance, potentially testing July's high of 1.3750, would be required to negate the immediate bearish structural risks for 2025. Important levels to watch are immediate support at 1.3470 to 1.3460 and resistance at 1.3540 and 1.3590 to 1.3600. In recap, short-term, PUSD is holding firm around 1.35 with a cautiously bullish bias, largely due to Fed easing bets. A dovish Fed meeting next week, combined with a steady BoE, has a moderate likelihood of pushing the pair towards the 1.3620 to 1.3750 range. However, any hotter-than-expected U.S. inflation or significant weakening in UK GDP could rapidly reverse this, likely sending the pair below 1.3470 and targeting deeper supports. The long-term outlook for 2025, as projected by FX Street analysts, presents a high likelihood of USD strengthening against GBP, especially if a Trump administration implements protectionist policies and the Fed maintains a cautious stance while the BoE adopts a more dovish tone. Traders should closely monitor upcoming US CPI data, the Federal Reserve's rate decision next week, and any statements from the Bank of England regarding their monetary policy path. Keep an eye on the 1.3500 psychological level for short-term support and resistance at 1.3595 for potential breakouts. These key economic events will likely serve as catalysts, determining whether GBPUSD continues its current consolidation or embarks on a new, more decisive trend. Thank you for watching Explain the Charts, and we look forward to seeing you in our next analysis.